researchers and whoever is interested in the topics that we cover, and this is actually one of them. So very briefly, and this talk is going to be very conceptual. So there's no code here, nothing of the sort. What are we talking about here? I'm sure that you all know that there's been a push recently on, let's say over the last six months, on security tokens, that they used to be unsexy, and I'm not to say that now they've become sexy, but that the people are getting interested in them, and this old conversation or around whether tokens are utilities, security tokens and so forth, and essentially a lot of the ICOs that we'd seen where people were trying to dodge, dodge regulation by making sure that they were insisting heavily on the fact that their tokens were only utility tokens and had no security or financial component. This is just like passé now, and déjà vu, as now everybody or I think many people are just trying to make sure that they comply with regulation and financial regulation in particular. And I think I just want to point this or to insist on this, because that sort of that was our view about 18 months ago already, that this discussion was interesting and understandable, obviously, but that for me one of the really the strong value added of blockchain was the ability to convey security tokens and essentially to just transform the security industry. So, first of all, a quick definition. Security tokens, what are we talking about? They're designed to represent complete or fractional ownership of interest in assets or entities. I mean, it's it's very wide definition, and I add and the set of rights that associated with this ownership. So this set of rights can be pretty much anything. It can be economic, of stock and bonds, and so that could be dividends, coupons, and so forth. It can be governance associated, with voting rights and so forth, or it could be other rights, and I'm not going to dwell on that, but there could be other things as well. So just a quote here that just to capture or try to capture your attention on why this is really important. No later than November 2017, the Robert Gridfield, the chairman of NASDAQ, pointed out that in his mind every stock and bond on Wall Street could be tokenized. And various pundits subsequent to this declaration I've predicted by 2025, essentially, even like, some said 5 years from now, and that was in 2018, but certainly by 2025, every financial asset will be tokenized. So, we're talking here, obviously, about a huge market. One of the actually one of these pundits, or if he can be called like that, but is for instance Patrick Byrne, the president of Overstock that founded T0. So now the main issue now is why can we come up with a standard, with a norm to have a universal token? Obviously, I mean, talking of a universal token is very presumptuous, and preposterous in some way, because it is obviously much difficult to do. There are efforts underway, as you know, and probably some of you are maybe associated with that. The norm. The ERC 1400 norm, and the various norms that it could cover as an umbrella. I want to point out the work by Polymath, the securities token standard, and so forth. And roughly speaking, the ERC 1400 should be retrocompatible with the ERC 20. So at least within the Ethereum community, there's been quite early on a strong push for coming up with, with the security token standard. And as far as I know, it's still now it's been published, and there's a lot of ongoing work on this, and I think it's great. Another recent announcement was by the D'Oreal network, by Consensus in particular, actually its French office. And they came up with a platform that you may have already used for issuing, managing, and transferring security tokens compatible with Ethereum blockchains, whether public or private. While, and I insist on that because that's that's really important, while complying with European regulation, which, as you know, is quite intricate and demanding as all regulations. Now, one important thing, why do security tokens, what do security tokens bring to the table? I mean, and why is the finance industry so much interested? I mean, I'm focusing on the finance industry, but, it goes way beyond that, actually. I think, the various economic interests, but at least the finance, financial industry is interested in, well, the post-trade infrastructure. It's not a particularly sexy subject, within if you teach finance. I mean, I used to work in it. I was, in the front office, and if you look at the programs in master programs in finance, if you look at the syllabi, you will often see this issue of, like the post-trade infrastructure sort of, put aside, because until a few years ago, it wasn't, particularly interesting. Now it's become, very focal point. Because all the financial industry and the various institutions think that there's a lot of savings. There's essentially two things. There's a lot of cost savings to be made, and that's I would say as usual. But there's also a lot of new services to be added to the existing infrastructure, and that is why actually they're so interested in it, because I would say as Google and Facebook want to go into the banking and the insurance industry, those players could want to do the opposite in sort of getting out of their traditional financial services. Now, the second main reason is from for CFOs and treasurers and asset managers. That is very important to better know the liability side. So the liability side is, essentially the investors, the creditors that you may have, is really essential to better manage the asset side. So in terms of liquidity risk and so forth, if you're an asset manager or portfolio manager, you want to know what patterns do your investors have in terms of withdrawal and so forth. And so if you have a very clear understanding and control over that, it will certainly help you better manage your portfolio. So, that is a very important point. Then, the last 2 points, I mean, for regulators, obviously, why are they so, I think, enthusiastic about blockchain or DLT, in general? It is because they hope that it's going to help, and I think they rightfully think that it's going to help with, with controlling and avoiding various things such as market manipulations and so forth. So the last point here is, it's a higher immunity from fraud for every stakeholder. Now, I'm going to skip the various side. I'm just going to discuss that very quickly. What are the promising spaces, the use cases where security features, can be involved? And I think as for our research group, these are the things that we focus on. There's obviously the asset tokenization, which you've all heard of, and you see tons of startups around the world going about it's just like asset tokenization, whether it's for real estate, luxury products. For instance, I advise one of the companies doing that, art works and so forth. Now, supply chain traceability, we've all heard of that again. It's across economic sectors. It's a big push for that. I insist that there could be a security token component in that. For instance, there are various initiatives related to trade finance where essentially the token which is circulated has financial rights attached to it. So, you know, I include the supply chain traceability within this category. Then, you know, SME, that stands for small and medium enterprise financing. There's been, you know, a lot of initiative on that. Green finance, Islamic finance, actually, which is sort of a, you know, there's, I don't know, maybe some of you have come in from the Middle East. There's, you know, for sukuk, and you know, Islamic bonds, there's probably, and there are various initiatives around that. Now, one thing that I particularly care about and I'm interested about is this thing called slow finance. What is slow finance? In short, in you know, in 30 seconds, that is, you know, finance where you've all heard that, you know, if you talk to company managers and so forth, they hate speculations, they hate hedge funds. I mean, you know, I'm exaggerating, but, you know, they don't like hedge funds, they don't like, you know, investors who have very short-term positions and so forth, and they can hardly, you know, control for that. Now with, you know, these security tokens, you know, properly parameterized, and you can, you know, you can attach a whole variety of lockup conditions, not just on the issuer side, and, you know, against what you would see in traditional, I don't know, initial public offerings and so forth, and ICOs as well, but on the investor side. And so that could, you know, I think it's a very promising field, for instance, because, you know, it should allow, for instance, companies to raise money with security tokens, with the assurance, for instance, that their tokens are not going to be traded on the secondary market for 3 to 5 years to, you know, for whichever period they deem appropriate. And then, you know, the other areas are just, you know, things that we've heard about. I mean, I put hybrid tokens, which have utility and security features. Directed money, I think is another, I'm going to skip that, but I think it's a very interesting field in the insurance sector. And also consumer loyalty programs, especially for systems in the making, that is, you know, in situations where token holders acquire the token in the hope that the overall system that the token is attached to is going to grow and expand. So there's a speculative component in the act of acquiring the token, which makes it not just a utility token. So I think I have 1 minute left. So I'm going to skip that, but, you know, if you look, I've done a sort of a comprehensive summary of all the initiatives I've seen over the last 18 months, showing that, you know, institutions are moving clearly into the crypto space, you know that, but also the security token space. And, you know, I'm just going to, you see, you know, NASDAQ, the SIX, the Swiss Stock Exchange, Deutsche Börse, the ICE, the parent company of the NYSE, Fidelity Investment, one of the largest fund managers in the world, Goldman Sachs, obviously, T0 I've already mentioned, and then, you know, many other initiatives. One of which, you know, is worth pointing out, the World Bank, which has sold a 2-year public bond to public investors for about 80 million euro, which is issued actually on an Ethereum-based blockchain, and also, you know, the ASX in Australia, which is very advanced, and the DTCC, and you know, some other. The last point here is some initiatives that we have in France, especially one called Liquid Share, which has many, you know, stakeholders around it. So essentially now, in terms, you know, like the concepts and the desirable features that one wants to see, I'm just gonna, you know, insist on the point of finding the right trade-off between simplicity and complexity. So, you know, the desirable feature, I mean, I've already mentioned, but, you know, you want to have control over economic rights, governance rights, the conditions of acquisition with, you know, KYC and so forth, the conditions of transferability with lockups for issuers and investors, and also, and I think this is sort of skipped sometimes or not properly considered, you want, you know, as much as possible to have a holistic approach to anticipate some considerations that are very important for SMEs or companies in general and any issuer, which is risk, compliance, and regulatory considerations. So if when designing your token you can anticipate that as much as possible, and because, as you know, for instance, if you look at Solvency II in the insurance sector, it's a real pain. If you look at the compliance and the reporting burdens that financial institutions or small asset managers have, they're huge. So complying with the regulation in its own right is a big issue. So as much as you can facilitate that when designing your token, it should be extremely helpful. So. Clearly, the issue, as I mentioned, is interoperability, and the main issue is, as I said, really finding the right trade-off between pushing forward a simple cornerstone standard to have large adoption across all asset classes, while allowing specialization for more sophisticated products down the road through, some kind of add-on modularity. I mean, I used to structure, products and derivatives and exotic options. Obviously, I'm not expecting that the, security token standard that if there was, whatever is existing already or whatever is likely to come up in the, within the next 12 months is gonna, accommodate very sophisticated products of the exotic option type. But still, I'd like to have a basic building block of a security token upon which I can, add on some modular features to be able to accommodate and deal with more sophisticated instruments. So, and I will conclude now. This is just, some just takeaway points that I want you to, whoever is interested in that subject and not already working, on it to remember. I think, it's fair to say that right now, and, it was to be expected, many of the standards have been catering to their own use cases as opposed to, focusing on developing a global security standards. And that's perfectly, understandable because, as I said, when you want to develop a norm, you need to get all stakeholders around the table. And as you know, the more people you have around a conference room, usually the slower the advancement, and the slower the progress. But still, this issue is all about norms, interoperability, obviously, and scaling. So I really think it's a race to acquire critical mass, obviously. And my main point here, and which I wanted to, and something that I wanted to convey here to the community at large, is I think that, there's right now, and I didn't dwell on this, but there's I think there's a very important institutional push right now. And while I think that, it's very difficult to predict the future, but while I think it's going to be difficult for all the banks, obviously, to agree on one common standard, there are initiatives. And for instance, there's one initiative called the Universal Trading Network, which is related to trade finance, which has, a good number of institutions around. And I think if this materializes, you will have an example of a global, trading token. Now, one could expect to have the same for a global, standard security token. And when this happens, actually, it's going to be interesting to see the interplay between the open source approach, for instance, the one fostered by Consensus and others around the Ethereum community, and this, institutional approach. And I think, as you know, the latter has so much power that would be the last point, make sure that whatever this global standard is, make sure that it remains a blockchain in the sense that, you know, it won't be too much of a private security token standard, which would be controlled by you know, a small number of interests. Thank you very much. I don't think we have time for any question, but if there's